What if I told you that you could potentially double your money, just by following the lead of one of the greatest investors of all time? That's right. Today, we're diving deep into the legendary Warren Buffett's investment strategy and spotlighting three powerhouse stocks from his Berkshire Hathaway portfolio that you might want to consider adding to yours right now. We're talking about a game-changing electric vehicle leader, a global beverage icon with unbeatable brand power, and a rising financial player that's flying under the radar. These aren't just random companies. These are carefully chosen investments from the Oracle of Omaha himself. So, if you only watch one video today, make sure it's this one. Stick around to the end because we're about to uncover why these companies are primed for growth and how you could profit from their success. Let's start with a company that's been electrifying the automotive world, literally. BYD, ticker symbol BYDDF on the OTC markets, is a Chinese multinational conglomerate that is completely dominating the electric vehicle space. This isn't just hype. BYD is producing electric cars, buses, trucks, and even e-bikes at a scale that's turning heads around the world. In fact, they've surpassed Tesla in global EV sales, a feat that was unthinkable just a few years ago. Warren Buffett saw the potential early. Berkshire Hathaway made a bold move back in 2008, investing in BYD when electric vehicles were barely on the radar. That investment has skyrocketed in value, and today, BYD stands as a shining example of long-term vision meeting innovation. What makes BYD stand out? One word: integration. They're vertically integrated, meaning they control nearly every part of their production, from battery technology to final assembly. Unlike Tesla, which relies on external suppliers for key components, BYD makes its own batteries and even sells them to competitors. This gives them a huge edge in cost, quality control, and scalability. Financially, BYD is a beast. In 2024, they generated a staggering $777.1 billion in revenue and over $40 billion in net income. Despite those massive numbers, the stock is trading at a pay ratio of just 3.2, far below industry averages. It's currently priced at around $44.33 per share, while analysts estimate its fair value to be close to $126. That's a potential 186% upside. It's not just undervalued, it's screaming opportunity. Of course, investing in Chinese companies comes with geopolitical risks, but BYD's global footprint, with a presence in over 70 countries, helps offset that. They're expanding into Europe and North America and pushing innovation with their own in-car operating system. Think Tesla-style software, but made in China. For anyone looking to invest in the future of transportation, BYD is a stock to watch. Next up, we pivot to a name that's been a staple in homes around the world for over a century. Coca-Cola, ticker symbol CO. Now I know what you're thinking. Coca-Cola. Isn't that a bit boring? But hear me out. Coca-Cola is a titan in the beverage industry, with over 200 brands under its umbrella: Sprite, Fanta, Minute Maid, Dasani, and of course, the iconic Coke. Their brand recognition is second to none. You can find a bottle of Coke in a remote village or a bustling metropolis. That's the power of global reach. This isn't just a soda company. It's a masterclass in brand loyalty and global logistics. Coca-Cola has built one of the most efficient distribution networks on the planet. Their bottling and delivery infrastructure ensures that their products are always within arm's reach of the consumer. And while sugary drinks face growing scrutiny, Coca-Cola is adapting fast. They're reducing sugar content, launching smaller serving sizes, and expanding into healthier categories like bottled water, teas, and sports drinks. They're not just surviving, they're evolving. Financially, the company is rock solid. In 2024, Coca-Cola brought in $47 billion in revenue and $10.6 billion in net income, with a pay ratio of 28.3 and a 2.81% dividend yield. It's a go-to stock for long-term investors seeking stable returns. It may not be flashy, but when the market gets rough, Coca-Cola is exactly the kind of anchor you want in your portfolio. Now let's talk about a lesser-known but extremely promising player, Jefferies Financial Group, ticker symbol JEF. You might not hear about them in mainstream investing conversations, but they've been quietly building a powerhouse in investment banking, capital markets, and asset management. Jefferies is agile, entrepreneurial, and client-focused, the kind of company Warren Buffett loves. Berkshire Hathaway has been steadily increasing its position in Jefferies, signaling serious confidence in its future. What makes Jefferies so exciting right now? 3 big trends. First, the rise of private markets. More companies are staying private longer, and Jefferies is helping to fund and advise them. Second, the growing demand for alternative investments, where Jefferies is expanding rapidly. And third, the consolidation happening across financial services, a trend Jefferies is well positioned to benefit from. In 2024, Jefferies generated $10.5 billion in revenue and $669 million in net income, with a pay ratio of just 14.01. The kicker, a solid 3.25% dividend yield, higher than both BYD and Coca-Cola. It's rare to find a financial firm offering that kind of income with strong fundamentals and growth potential. Jefferies is also investing in cutting-edge fintech, expanding into emerging markets, and attracting top talent by fostering a culture of innovation and inclusion. They're forward-thinking and client-centric, 2 traits that give them an edge in a fast-changing financial landscape. So, let's recap. You've got BYD, a disruptive EV giant with massive growth potential, Coca-Cola, a rock-solid dividend king with global brand power, and Jefferies, an under-the-radar financial player with attractive yields and serious upside. Each of these companies represents a different strength, innovation, stability, and value. Together, they offer a powerful combination for any smart investor looking to build a strong, diversified portfolio, just like Warren Buffett has done for decades. If you're serious about investing for the long haul, these are 3 names you'll want to keep on your radar. Now, I want to hear from you. Which of these Buffett-backed stocks are you most excited about? Drop your thoughts in the comments below. Don't forget to like this video, share it with fellow investors, and subscribe so you never miss the next big investing update. Thanks for watching, and I'll see you in the next one.